So during the recent State of the Union, the Biden administration just announced a bunch of new proposals geared towards the housing market that are supposed to help both buyers and sellers. So what are those proposals, and will they actually do anything to help this housing market? That's what we're going to talk about on today's episode. So let's go ahead and get into it. So real quick, two things before we get started. Number one, this is not a political show by any means. However, sometimes, and actually often, the federal government has a large hand in what's happening in the housing market. So it's important to be able to update you on things happening at the federal level that can impact you both buying and selling a home. The second thing you want to remember is these are all proposals, so nothing has taken effect yet. There's nothing going on right now. They have to go through the normal procedures of going through Congress, getting it approved, which we all know how long that could take. So many of these things might never come to pass, but if they do, if you subscribe to this channel, I'll keep you updated as things move along. So let's go ahead and get into the first one. So the first one they call mortgage relief credit, and it's broken down into two sections. So the first one is basically middle-class first-time home buyers are going to receive a $5,000 credit for the first 2 years after they purchase their first home. Now the two things to note on this is it says middle class. Now they didn't define that in terms of what income levels you are. However, based on the past, I would assume this probably means that you have to be making the median income or less in whatever county you're purchasing the home from. And in terms of the credit, realize that it is a credit and not a deduction, which means you get that full $5,000 at tax time for the first 2 years, which definitely could be helpful. So let's go over the pros of this. So number one is obviously when you break it down by month, this gives you a little over $400 a month to be able to use to help offset your mortgage, to help pay for furniture when you move into a new home, to help pay for fixes that you need to do on the property. So it definitely could be an advantage, especially for first-time home buyers who tend to put a lot of their savings into the down payment and aren't left with a lot. So every dollar really helps out. The second thing that I could see this being a pro for is that right now it is predicted that interest rates will continue to decline over the next 2 years. So this type of policy, if it was implemented quickly, would be able to kind of act as a bridge between right now and when you eventually could refinance your loan and then hopefully reduce your monthly mortgage payment permanently. So those are definitely the pros of this. Now there are some cons as well, however. So number one being, this is not going to help you qualify to be able to afford a larger home. So that tax credit is not something the lender is going to look at to figure out how much home you can afford. So if you can only afford a home that let's say is $600,000, this credit is going to do nothing to help you afford a larger home. So if you currently can't afford a home to buy, this credit really isn't going to help you out. It's just there for those that can afford a home to be able to help them out once they purchase that first home. Now the second disadvantage, which is really the biggest one right now, is that we don't have an issue with demand in Orange County. We have an issue with supply. So let's say that there are a lot of people that end up trying to use this program. You're just putting more demand into the marketplace and supply is still significantly lower than where it needs to be. And already we have multiple offers on more homes than not in Orange County right now. We're seeing homes over the last month go into escrow $10, $20, $30, $50, $100,000 over asking price. So adding more buyers to the mix, yes, it might help out short term for a few buyers. However, over the long term, it's not a healthy thing for the housing market to see this accelerated appreciation. We need to get back to a more normalized market, and adding more demand to the marketplace right now, at least in Orange County and a lot of other places in the United States, is probably not the best idea. So the second part of this program is actually geared to the selling side of things. So on this program, it's offering $10,000 to middle-class families that sell their starter home to another buyer that's going to actually occupy that property. So that's a mouthful, but a couple explanations here. Again, they say middle-class family, they don't define it. I would probably assume it's someone making median income or less. And when they talk about starter homes, at least they define that. And they said the home's price needs to be at the median income in the county you live in or less to be considered a starter home. And then someone that's going to occupy the property. So it can't be an investor or a flipper. So the whole goal of this program is basically to get investors out of the most popular market, which is the starter home market, and be able to get people that actually want to live in the home a little bit better shot of getting that house. So by only offering that $10,000 to the seller, if they sell it to someone else that's going to occupy the property, it really puts the investor at more of a disadvantage. So already when an investor comes in to bid on a property, typically they're going to offer a little bit less because they're going to give you the convenience of a faster escrow, oftentimes sometimes a cash offer to basically be more enticing to take a slightly lower price instead of some other offers that might be a little bit higher. However, they're more risky and take longer to close. So this proposal will help at least make the playing field a little bit more equal. So let's say that a standard buyer offered $10,000 over what the investor offered. Maybe the seller takes that investor's offer because yes, it's a little bit less. However, it's a quick escrow. It's a little bit less hassle, not that big a deal. So they want to go with the investor. Well, this would basically give them double that. So not only do they get $10,000 more if they go with the buyer's offer instead, they're going to get a $10,000 credit on their tax return for selling it to a buyer, netting them a total of $20,000 more than what the investor is going to give them. And again, this is going to help push investors out of that first-time home buyer market, which is where a lot of the competition is and really hard for buyers to get into right now. So for this one, I actually like this proposal. So although it's not going to make a giant difference, it does give some buyers a little bit better chance of getting into that first starter home, which is one of the hardest things to do, without having to compete against a bunch of investors to do so. So it's definitely a big pro there. Really, the only con here has to do with the investing side of things. If you're trying to buy an investment property, it's going to make it more difficult. And really down the road, if investors aren't buying properties and turning them into rentals, then you're going to have a little bit less rentals on the market, which could artificially increase rental prices. But that's really the only con that I can see, and the likelihood of that happening is probably pretty low because the number of homes that investors are buying, especially in Orange County compared to some other lower price markets, is going to be relatively few. So I don't think that's going to be a major issue. So this one, although it's not going to be a giant benefit, it will definitely benefit some home buyers and give them ability to get into a home that they might not otherwise have been able to. Okay, so now on to the second proposal. So for this one, this is going to be down payment assistance for first generation home buyers. Now, California rolled out a program very similar to this last year, and it was by far the most popular loan program I have ever seen. So they thought the funds for it was going to last for at least a few months. They went through it in 11 days. So there is a lot of demand for programs like this, and what it basically offers is if you're a first generation home buyer, so whoever's on the loan, their parents can't own any property, then you're going to get up to $25,000 to use as a down payment to be able to purchase a home. Now, the details here are very sparse, so we don't really know what all is going to be required, if that $25,000 is going to be a grant that you don't have to pay back, or if it's something that, like the California program, you'll pay back once you sell the home. So hopefully they give us a little bit more detail there. But this program, as the name implies, is really just meant to get first generation home buyers into the market and get them into their first home. So obviously the pros of this is you're getting people that maybe couldn't afford to save up that down payment into a house, and really the only cons has to do with the demand side of things that I talked about earlier. If you're adding more demand into the marketplace, especially in that hot segment of starter homes, you're just going to be increasing home prices for everybody else trying to purchase those homes. So in the long run, is it a good idea? We'll have to wait to see how many people can take advantage of it, but overall, anything that increases demand right now in today's market, in the long term, is probably not going to help the housing market get to a more stable level. So the third proposal is basically going through and eliminating or reducing some fees that are involved when you try to get a mortgage. So for instance, the fees involved from a buyer to a lender, as well as the fees involved from a title company to the buyer or the seller as well. So again, there wasn't very much on this. They basically just said they're going to form some commissions, look at how these things operate, and see if they can get fees reduced. And overall, it's not going to make a significant impact on the market. If your fees get reduced by $200 when you try to get a loan, is that going to prevent you or make you want to buy a home anymore? Probably not. However, it is good for buyers to be able to eventually purchase a home and have a little bit less fees. So overall, not going to impact the market in any significant way, but it might take some extra fees out of the home buying and selling process. Okay, so I saved the best for last. So the fourth and the last proposal that they set out is probably the one that I'm most excited for because I think it could have the largest impact on the overall housing market, and that is to incentivize the building or restoration of 2 million properties so more people can have homes to live in. Because right now, the biggest issue, like I've said over and over again on this episode, is supply. We just do not have enough supply in the United States to be able to meet demand. Depending on which study you're looking at, we're anywhere from 3 to 7 million homes short of actually being able to meet the supply numbers we need to see that market balanced out. So this proposal is basically trying to get 2 million more homes on the market. Obviously, it's not going to happen overnight. This would probably take place over maybe a 10-year period. But anytime the government can incentivize homes getting on the market, especially in today's environment, is going to eventually lead to a healthier housing market. So how are they going to do this? There's a couple ways. So the first way is they're going to give tax credits to builders to either renovate or build new homes for people to rent out. The second way is called the neighborhood home tax credit, and that's an incentive to help build or preserve 400,000 single-family homes for people to live in. The third way is they're proposing $20 billion to help get multifamily units built, as well as decrease the barriers to be able to get homes built in the first place, and overall expanding those middle-class homes in the United States. And the fourth and final way is they're going to increase how much the federal home loan banks need to contribute to the affordable housing program from 10 to 20%, which is going to increase those funds by about $3.8 billion, which again is going to help build and preserve more middle-class homes for those that need it the most. So like I said before, this is the part of the proposal I am most excited for, and even though it's a very long time frame for all of this to take place, if this does happen, it will help at least increase the odds of buyers being able to get into a property without having to worry about multiple offers on every house, appreciation happening at 5, 10, 15, 20% a year, and we can finally get back to a healthy housing market that's chugging along, where buyers are going to have a little bit more choices, have a little bit more time to be able to select which home they want. Sellers are still going to be able to sell their home, but it might take a few weeks or maybe a month or two to be able to get their home off the market. And that is going to lead to appreciation numbers that are a lot more sustainable, and they're going to be able to have wages be able to keep up with how much homes are going up in value. And that's ultimately what we want, is a healthy housing market that we don't have to worry about when's the next bubble coming. We want to get back to something that's going to be even, healthy for both buyers and sellers. So overall, there's definitely some pros and some cons about these proposals. I think the biggest cons have to do with the short term of what's going to happen in the housing market, because it's going to increase demand. Maybe not significantly, but again, right now, anytime we increase demand, you're just going to see home values go up a little bit faster. So even though it does help out home buyers, and I love helping out first-time home buyers get into homes, there might be some temporary relief. However, over the long term, it can end up hurting a lot more buyers. Now, the long-term solutions about building more supply in the market, great idea. I hope we can get that done. So overall, I'm hoping they go through this, make some changes, get some input from the industry to figure out exactly what would be the best way going forward, and then make sure they actually take in the current supply and demand before they start passing things, so they don't make the problem worse. Now, if you are a first-time homebuyer right now and you want to be able to get some assistance now instead of waiting for these things to pass, there are programs available like that Dream for All program in California right now that I referenced earlier, where you can get up to 20% down payment assistance. However, their application opens up on April 3rd, and you need to talk to a lender, get a letter of recommendation before you apply for that before April 3rd. So if you haven't done that already and you want to learn more information about the program to see if you qualify for it, check out this video right here, because I talked to one of my lender partners. We go through everything that you need to know to figure out if you qualify for that program, and then you can take the next steps before April 3rd. So until next time, stay happy, stay healthy, and I'll see you on the next show. Bye, everybody.